welcome back everyone to the Audacious Money Witch channel, where we talk about investing and trading stocks, bonds, and crypto assets around the world. Markets are crashing on the Fed Wednesday after a 25 basis point cut by the Federal Reserve. The S&P 500 is down 3%, the Nasdaq is down almost 4%, and the Dow Jones is continuing its 10th day losing streak, the longest since 1978. Gold is down 2%, Bitcoin is down more than 5%. The scary US dollar rallied more than 1% intraday, a huge move for the DXY. Wow, guys, we have not seen a flash crash quite like this in a while, and it leads us to the question of what just happened. Is this Wall Street freaking out about the Federal Reserve, or is it part of a sinister plan to liquidate retail investors? In today's video, we will take a look at what this may mean for all of us and why the VIX was up over 70%. We've got bond yield breakouts as I predicted. I will be speaking about the Fed J. Powell, my thoughts, and which stock I sold before the crash. And I will talk about Nike's massive warning since I own the dang stock.
The founder and the chairman of Interactive Broker recently made a post on X, then deleted later. He said that over the last 3 months, their margin call loans are up by 16%. He also said that he hoped that the market would not come down too fast, so they can liquidate as it happens, and they will not end up backholding from people that are unable to meet their margin calls. So wow.
Now here's the big issue. What did we just see? A flash sell? Why? It fed upon itself. It's what we call a cascade or a waterfall effect, and of course, many people unfortunately will have been liquidated over the last 24 hours on Wednesday. Since Trump's victory shows us that everyone was feeling very optimistic. We know leverage was up because IBKR told us. We saw a huge amount of flows going into 3 times leverage funds. And we know household allocation to stocks is at an all-time high. So what would Wall Street want to do in this situation? They would want to create blood in the streets, make people freak out, and obviously liquidate people. This is the worst single-day sell-off in stocks and bonds in months. Clearly, the markets did not anticipate this. However, on this channel, I gave you guys a warning literally just one video ago. I said long bond yield is going to go up again and stocks would crash if that plays out. Of course, I took my coins profit way before Wednesday. If you want to learn more about how the bond market works, and if you didn't get a chance to see that video, check it out for deeper understanding of what's to come in bond markets perspective. Now let's talk about the Federal Reserve.
Why officials think it's appropriate to cut rates at all in 2025 if inflation is expected to remain firm throughout the year? And what would you expect at this point the timing might look like? Would a January cut potentially be possible, or does it pause next month?
Well, so let me start by saying why we cut today and then move to 2025. So I would say today was a closer call, but we decided it was the right call because we thought it was the best decision to foster achievement of both of our goals, maximum employment and price stability. We see the risks as two-sided, moving too slowly and needlessly undermine economic activity in the labor market, or move too quickly and needlessly undermine our progress on inflation. So we're trying to steer between those two risks. So I'll just say, so remember that we coupled this decision today with the extent and timing language in the post-meeting statement that signals that we are at or near a point at which it will be appropriate to slow the pace of further adjustments. You ask about 2025. I think that the slower pace of cuts for next year really reflects both the higher inflation readings we've had this year and the expectation that inflation will be higher.
The big surprise to the markets was, until now, you have Jerome Powell, who was more seen as a big supporter of the stock market. So, in other words, there is a correction. He will step in and he will say favorable things, cause the rally to go on again. I have been critical of him because the fact that he's not focused on just inflation. He's focused really on boosting the stock market, even though he doesn't say so.
Wednesday's developments, his press conference, and the Fed decision essentially told the markets that he may not be there to support them in the future. That is a big difference in the last 4 years. Powell admitted that inflation is not coming down fast enough to the Fed's liking, even though he said the economy is weaker than in 2019 already.
A much cooler labor market than we had in 2019.
The market essentially believes that the rate cuts are highly uncertain. So the Fed, from being the market's friend to now, is causing the markets to crash. It seems they are gaslighting you.
Whoever you choose has got to be someone you trust.
I guess that rules out the Federal Reserve.
Only the bond market is telling the truth. So go check out that TLT video if you haven't seen it. Now let's jump into Nike, the stock Jeremy can't stop buying.
Nike's turnaround will take a bit longer than expected under new CEO Elliot Hill, who outlined his strategy to return to the company to growth after the retailer blamed deep discounting for declining revenue and profit. The sneaker giant has been relying on promotion to drive sales. It plans to return its online business to a full-price model, but at first, it will need to aggressively liquidate old inventory through less profitable channels, said Hill and CFO Matt Friend.
What I've seen is traffic in Nike Direct, digital and physical, has softened because we lack newness in product and we're not delivering inspiring stories, said Hill. The result is we've become far too promotional. Entering the year, our digital platforms were delivering roughly a 50-50 split of full price to promotional sales. The level of markdowns not only impacts our brand, but it also disrupts the overall marketplace and the profitability of our partners. After an energizing 60 days of being back with my Nike teammates, our clear priority is to return sport to the center of everything we do. We're taking immediate action to reposition our business so we can get back to driving long-term shareholder value. Our team is ready to go, and I'm confident you will see more moments of Nike being Nike again.
During one of the busiest shopping weekends of the year, Nike was the only brand to have a 30% discount on most of its footwear at Macy's famous Herald Square location in New York City.
Nike is in a race for cash. Chief Executive Elliot Hill said after he took over in October that his priority was clearing out the company's inventory. The company is slashing prices on its website so aggressively that it is not only risking its own holiday sales, but also weighing on its retail partners. This is the first quarter under Hill's leadership. I have an irrational love for this company. I know Nike inside out, take pride in what the brand stands for, and want to see the company succeed. Hill said in his opening remarks, "In a moment where our team brand and business are being challenged, my singular focus is to help get us back on track. To get back to winning."
The sneaker giant reported its third consecutive quarter sales decline, a 9% drop from a year earlier. Its profit fell 10% in the quarter from the year earlier period. The discount-driven cleanup has already made a dent on the results of some of the Nike's larger partners. Everything is in decline. This is bad. It doesn't say that we are in soft landing at all.
A pair of Dunk sneakers sells for $115 at Dick's Sporting Goods or Foot Locker, but but shoppers can get the same shoes for $85 on Nike's website. It impacts the perception of Nike by the consumer. It negatively impacts the brand. JD Sports CEO said in November about Nike's discounts, Nike is now selling more to retailers such as Foot Locker and Macy's than it did a couple of years ago. It is also rekindling relationships with retailers such as DSW, with which it cut ties in 2022 under former CEO John Donahoe. To focus on selling items directly to consumers, the strategy yielded record profits at first, but early last year, executives realized they were stuck with too much merchandise and needed help unloading it.
Nike still dwarfs its sneaker competitors, and its products are priced by retailers. Executives from Foot Locker, JD Sports, and Macy's have voiced support for Hill's strategy, saying their businesses will benefit from selling more Nike merchandise in the long run.
Elliott and his team, I think, are absolutely taking the right actions for the brand in the overall marketplace. Foot Locker CEO Mary Dillon said earlier this month, the chain posted weak quarterly sales and lowered its finance targets in its October earnings report, citing softness in Nike's business. Nike's discounts were higher than the retailer anticipated, but Dillon said she expects their intensity to abate. Nike is catching up in the running category because it underinvested in local communities in recent years. Other brands such as Brooks and Hoka captured runners in Nike's absence. Nike's executives reduced supply of its Dunk, Air Jordan 1, and Air Force 1 franchisees to protect their public perception, but the company is still making more of these shoes than it can sell. More than half of Nike's men's footwear was being sold at a discount on the company's website. This story is not about this quarter or next. It is about the fiscal year 2026 and beyond. Nike is in a period of transition, and a return to growth could take a few quarters. Likelihood of a brand turnaround over the next year.
With top-line challenges unlikely to abate anytime soon and increased promos impacting margins, Nike's road ahead remains challenging. In addition, heightened competition and reduced wholesale footprint means a turnaround will take time. For me, Nike is a brand I like. I will hold my shares, collect the dividends, and ignore the stock price. I don't think you need to sell out of this one at all if you still like the brand.
New tariffs could complicate Nike's recovery plans. It makes most of its footwear in Asia. The company would face higher costs if Trump follows through on the plans to add new tariffs on most imports into the US. That would cause inflation problem to the Fed as well. Okay, everyone, please like and subscribe to Audacious Money Witch channel.